What's on your mind? What have you been covering lately on your YouTube channel? But also give it a shout out, man. I'm sure most of you guys are already subscribed anyways.
Yeah, you know, Mark Moss is the YouTube channel. I've always tried to talk about why Bitcoin. So, you know, there's lots of, I look at Bitcoin sort of like hunters and farmers. So you certainly have the BTC sessions and the What Bitcoin Did, which are amazing, and you should certainly watch them. And if you're a Bitcoiner, definitely learn new types of things about Bitcoin. But if you're not a Bitcoiner, people ask why. Why do we need something like Bitcoin? What's wrong with our money today? Things like that. So those are the topics I try to hit on. So mostly around monetary policy, what the heck the Fed's doing, inflation, geopolitical pictures. I think most of the catalyst for Bitcoin's growth is really coming offshore, not onshore. So everyone's like holding their breath for the BlackRock ETF. I don't think that's the big catalyst. So I talk about the geopolitical picture and then freedom censorship stuff, because I think that's a big catalyst. So those are the topics I tend to talk about and then present Bitcoin as a solution to try to answer the why question. That's typically what I talk about. At this event, I'm going to be doing my keynote here at the end of the day. And I'm going to be talking about, it's very difficult to wait when you don't know how long you have to wait for. And I find that most people's problem with understanding Bitcoin is they think that it's going to happen too fast, too soon. Bill Gates, who I don't want to quote, but he said that most people underestimate what they can do in a year, or overestimate what they can do in a year, and underestimate in 10 years. And I think that's Bitcoin, right? And so they think Bitcoin's going to happen really fast. So my point of my talk is to give some time frames as to how I see this unraveling, as well as how it unravels, what the stages are, and what we should do in those stages to help push the adoption.
Yeah, absolutely. And one of the things I love about your channel, Mark, is the fact that what I see with a lot of Bitcoin content creators is they're creating content for the Bitcoin echo chamber. They're creating content for Bitcoiners that have already been orange pilled. But I love your approach, because it's like you're presenting the problem, and at the end you're sprinkling in the solution, which I think is really cool. So I think you buried the lead there, and I found it fascinating. BlackRock is not going to be the catalyst, do you think? Why is that?
I don't think so. I think everybody's hanging on this. Well, let me explain. So humans only act in our own self-interest. Mises wrote the book Human Action. You should read it. But we act, human action happens in our own self-interest. And so what are we self-interested in? Well, there's two things. So humans are very simple. Our reptilian brain, we're motivated by two things. One, moving towards pleasure, and two, running away from pain. Now, it's been proven that we move away from pain is a bigger driver than the pleasure. So when the price runs up parabolically, people want to jump in based off of greed or running to pleasure. So Bitcoin, if a BlackRock ETF takes off, potentially we can talk about this, but potentially there's a lot of buying activity that happens. The NGU technology takes over, the number starts going up, and people will rush to pleasure to buy. But the problem is that's like a sugar rush. I wouldn't consider myself a biohacker, but I'm an intermittent faster. I'm a fat-based energy driver instead of carbs and sugar. And so carbs and sugar burn really fast. Your energy levels go up and down. Every 3 hours I have to eat. But then when I have fat, my body sustains that. And so I look at if you're driven off of the greed, if I'm coming in to buy on the ETF sugar rush, those are people chasing money, and they're gonna leave just as quickly as the price goes down. Pain is the bigger driver. And so when I'm moving away from pain, what kind of pain? Well, potentially living in double or triple digit inflation, potentially living in harsh authoritarian regimes. So when I'm living in Argentina with double or triple digit inflation right now, in Argentina, the official exchange rate is, approximately 250 to 1 officially. Unofficially on the black market, it's like 550 to 1. But I was just recently in an event in Spain with a whole group from Argentina, and they're only able to spend, I think it was $300 per month on their credit card. So here they are traveling abroad, but they can only spend $300. Otherwise, it gets exchanged at 750 to 1. So their pain is extremely high, and they will do anything to get out of that pain. And Lebanon, they're burning down the banks. We can look at North Korea. We could make a list. But the problem is their pain is so high, they don't care about the volatility. And I believe that's a much stronger catalyst. And so I would just ask people this question most often. I would say, one, do you think governments, all central banks, print more money or less money in the future? And two, do you think governments become more authoritarian, or do they give us more freedoms back? What is the trend? And of course, in my opinion, the trend up and to the right is both money printing and authoritarianism. And I think that's the big catalyst. I think that's the real driver. I think the ETF potentially could give us a little bit of a sugar rush, and I even have my doubts about that. But even if that's a short-term sugar rush, it's not the long-term catalyst that Bitcoin's here to solve.
Interesting. And I completely agree, by the way. So I'm originally from Venezuela. and which endured hyperinflation. It was around 2016, 2017 when I got into Bitcoin, and it created these crazy mining opportunities in the country because of course they try to control the exchange rate, but everyone's playing the black market rate. So you were essentially, there was a period of time where you were mining for free, essentially. But anyways, what are your thoughts on Javier Milei, who just won the presidential candidacy in Argentina by 11 points? He's a hardcore Austrian economist. He has some thoughts, to say the least, about central banking, about the theft of inflation, and moving the Overton window in the process. So I know he's a politician. I know politicians will say whatever it takes to get votes, but
not in his case. And he is breaking that norm. And so there's actually something very interesting going on in just regards to what you just said. First of all, Austrian economist. I believe he's named several of his dogs after like these old Austrian economics, something funny. But what he's breaking my mindset, in a sense, to what you just said. People will say whatever they need to get elected. And so the problem with democracy, I forget who said it, maybe it was Friedman, but the problem with democracy is, or no, actually it was someone else back in the 1800s. The problem with democracy, as soon as a group of people realize that they can vote themselves more goods and services, they will continue to do that. And so democracy is really the tyranny of the minority by the majority. And so what politician, my thought process has always been, what politician could win on a platform of taking away goods and services for people? If I want to reduce welfare, reduce benefits, reduce Medicaid, whatever, who's going to vote for that? Nobody. But he's disproving that because he's literally running on a campaign to reduce government spending, to bring central banks in. And so it's destroying the model that I've thought of. And so I think it's super, super interesting. Now, we'll see if he gets elected. But he is running with the majority by a decent amount at this point. So I think something is interesting in that. Like I said, one, it breaks my mental model. But I think maybe two, it also proves the thesis of what I just said, which is people only take action when the pain is high enough. And pain is more powerful of a driver than greed. And so what we're seeing in Argentina is the pain is so bad that they would rather take care of the pain than take more greed of handouts. Maybe.
And that's insane. That's insane, right? That it's gotten to that point. And Argentina has been running these experimentations, like, they went through heavily socialist governments, then they had on the other extreme. And what's really interesting, though, too, Mark, and I find it absolutely fascinating, is the bailout that the IMF gave Argentina came with the condition that the Argentine government had to de-incentivize the adoption of Bitcoin. I think I heard it earlier. It was even farther than that they couldn't make Bitcoin legal tender in the country, right? So even if this guy gets elected, are they going to be constrained by that IMF bailout?
Yeah, I mean, that's a whole other interesting development that's going on with that. There's a saying something like, if I owe the bank $1 million, then I'm in trouble. But if I owe the bank $1 billion, they're in trouble. And so if you look at the IMF, the three largest debts on the IMF books are Argentina, Egypt, and Ukraine. Think about this. So if somebody like him gets elected and he decides to potentially restructure or default on some of that debt, which one of the big arguments that we have in this macro conversation, which we might address on the stage later, is that I was on a call with Andy Sheckman, he's a gold guy, and Brent Johnson, the dollar milkshake guy, just on Friday. And he was saying, look, you don't understand, all this debt is dollar-denominated debt. And so in order for this to be settled, we have to extinguish that debt, which would cause massive deflation. And how can we extinguish that debt if these countries are moving to non-dollar denominated assets? And I said, default. So if we're no longer friendly with these countries, can they just say we don't want to pay? And so if you have Ukraine go down, I mean, not to jump into that rabbit hole necessarily, but it looks like as of today, there's absolutely a non-zero chance that they win at this point. So if they go down, what happens to that debt they owe the IMF? What happens to Argentina's debt if they get somebody like this elected who says, look, we have to restructure this. No way we can pay it. Now, what the IMF wants, and they did with Sri Lanka, is there's no way you can default on the debt. So what we'll do is we'll restructure, we'll give you more, we'll change the terms, but we have to keep that going. But back to the point that you're asking, what could the IMF do? Well, they could do a lot of things unless he decides he just doesn't want to abide by that.
Yeah. And I know he's not a fan of the IMF whatsoever. I know he's been vocal about it as well. Anyways, I want to welcome on to the panel Preston Pysh. How you doing, man?
Doing great.
We were just talking about the Argentine election that's potentially going down with an Austrian economist, and I was bringing up the fact he had asked about the IMF and the debt, and I was saying how interesting it is that the IMF's 3 largest debtors are Ukraine, Egypt, and Argentina. And if Ukraine goes down, which looks at this point highly likely, what happens with that debt? And then if you get somebody like Milei or whatever his name is in Argentina, if he decides to restructure or default, like what happens with the IMF?
Yeah, well, there was some news that came out, or at least I read it. Luke Roman's Friday release, he was talking about this exact dynamic where the IMF is like really losing a lot of their authority because they're rolling this debt and they're doing it in Chinese denominated currency in the way that they're rolling it. So it's like a pass through the way that they're taking the loan from the IMF, and I guess they're paying these bill or their debt back, and it's through these Chinese vehicles that they're using. So I'm not really well versed on it, but I know that there's some really interesting dynamics where it's basically sucking the power of the IMF away through just yet another example of the global shift that we're seeing from the old IMF, World Bank, U.S. dollar dominating everything over to this BRICS story and larger commodity-based money system that's kind of emerging.
So you do believe in the the multipolar world theory, that we're transitioning from a unipolar world to a multipolar world?
Oh yeah.
How could you not?
Yeah,
I mean,
no doubt about it.
Yeah, we're being smacked in the face with it everywhere we look. I mean, there's just no doubt about it. And I think this BRICS conference that just happened this last week, depending on what time frame you're looking at, it was a nothing burger or it's massive. Right? It's
Hold on. I'm going to stop you right there, and I want Mark to answer this. So we just had Nick Bhatti on from Bitcoin Layer, and I brought up the same question. I said, "What do you think about the BRICS announcements? How they want to drop the dollar?" And he said they've been announcing that for the last 18 years, and nothing's happened. So what would your response be?
So the first question you always have to answer. We'll be on a panel later, and we'll probably give different answers, but you always have to ask what time frame. So I said it's a nothing burger today, meaning it's a non-tradable event, but it's massive in the longer term. So then what time frame is Nick talking about? Now, they did, all the news for the last several months was August 22nd, they're going to announce this new BRICS currency, but before the event they said we're not going to announce that. But some of the rhetoric that came out of it was, for example, they were encouraging every nation to start trading in their own national currencies. 2, President Xi says that we want this bloc to outcompete the G7. So it's not a cooperative thing. So now this is creating competition, meaning they're going to try to compete each other, meaning probably more restrictive policies, trade policies, things like that. So it's a big deal from that perspective. Now, to Nick Bhatti's point, and him and I have had these discussions because he said that the death of the dollar is greatly exaggerated, which it is in the immediate term, but it's like the death of 1,000 cuts. And so what happens is you have reserve currencies. That's what the trade is being settled. And then you have reserve assets. And so the reserve currencies, they're already trading other currencies. The reserve asset, there's no replacement for U.S. Treasuries. There's no other like deep liquid bond market, et cetera. But they're starting to reserve in gold. So there is actually a replacement for it. And so with those two things, I think it's big. And also, as this trading block gets bigger, it's a big thing. So you go back to look at the creation of the euro 23 years ago. And I just used this in a video just last week. And I pulled up these old headlines from Wall Street Journal. And they're saying, oh, the euro is going to be nothing. It's not going to mean anything to the dollar. There's going to be no impact at all. It's going to fall apart, blah, blah, blah. Well, they created the euro, which is a trading block of nations. And the dollar lost 45% of its value because of that. Right? The euro is the largest trading the second largest currency. And so what happens is, as that European trading bloc, what is 19 countries now, has gotten bigger, it's made the euro more powerful. And so now with the BRICS getting bigger, 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 with the addition of these 6 new countries, they could potentially have a currency that could compete with the euro. And it has a long term, not an immediate impact, but long term.
You couldn't say it any better. It's what time frame are you looking at? I think a lot of the times that Nick is bringing up his talking point, he's looking at everybody dominating the headlines and saying, okay, so that might be true maybe in the long run, but in the short run, like the dollar's going nowhere, but it's going to continue to dominate markets. I think some of that's true. I'm much more in your camp that, like, hey, this is the reason why there's so many headlines is because we're seeing that we've reached a moment where this shift has occurred. Prior to COVID, prior to the BRICS really kind of getting a lot of headlines, especially last week with 3 more, the UAE, Saudi Arabia, and Iran potentially joining the BRICS. this is becoming a major deal. And
That's 80% of the world's oil.
80% of the world's oil. So if they are controlling the price of oil, congratulations, the central banks thinking that they can control the price of treasuries in the EU and in the US. I don't think they are on the controls anymore. I think the BRICS nations are on the controls if they can control the price of oil, because if they let the price of oil run, I'm sorry, that's going to leak into the price of everything because it's energy. Luke Roman does such a great point talking about, like, people have this misconception that it's the treasuries dominating, and I just retweeted a comment that he made. The equivalent that he says is, people look at Earth and they're like basically saying the solar system in our solar system is rotating around the Earth, and it's not rotating around the sun. That's the equivalent of people saying, oh, it's rotating around the treasuries and the dollar, right? It's rotating around energy. That is the number one input to the price of everything on the planet. And if you now have this block of countries that used to be very, U.S. friendly and allowing the dollar to price all of that oil around the world, shifting to basically every net producer on the country in the world, dominating that, I think it's a huge story. I think that the transition is going to maybe be a 5 to 10 year kind of time frame for it to really start to take hold. But make no mistake, like, this is really big, and this is very concerning for U.S. treasuries and European treasuries and Japanese treasuries. And I think it's a major mark in the timeline. Like, if you would really zoom out and look at it from like an 80-year lens, you'd say right here, 2020 COVID was a pretty strategic and important milestone that the tide had changed. And I think that's what the headlines are all about.
Yeah, absolutely. And I want to welcome on the panel Turr Demeester. Thank you so much for joining us, man.
Thanks for having me.
Yeah, Turr. Did you notice how Preston elbowed me when he said, if you saw what I tweeted? I've been locked out of Twitter for 3 weeks. Thanks, Preston. That was like a elbow. Yeah, I tweeted. I've been in the dark about that. I think there's something else that's like really interesting with this development, though, that I think you gotta look at. So first of all, the talk I'm giving later today is sort of giving this time period of what I think Bitcoin does over the next several decades. And back to kind of what Preston says, if you look at this over decades, and so when you look at the dollar taking over reserve currency status of the British pound, that was a 30, 40-year process, right? So this is a process. Yeah. But there's something else I think that's super important. One, in the shorter term, they're obviously going back to gold. These central banks, they're buying gold, they're reserving into gold, right? So there's that in the shorter term. But in the longer term, what comes next? How do we go back to an old technology that certainly can't have final settlement or instantaneous settlement, but there's
it failed.
Right, it failed. But what was interesting is, like, you hear this rhetoric of like these BRICS nations, how will they ever get together and align together? They can't, right? And so you have BR, the R is Russia and China, right? So arguably the two biggest, Russia and China. President Putin could not go to the summit because he would have been arrested. So how the heck are these people going to trust each other and agree when the leader of arguably the second largest country couldn't even go to the meeting without being arrested? So like I think it's a big deal, but like, what future does it have when they can't even trust each other to go to a meeting?
They've got a common enemy, and the enemy is the U.S. treasuries dominating and the SWIFT system and all of that. Like that's where they're totally aligned. But so, like, let's say they really start pushing on that. We go 5-10 years into the future, and it's really there's a lot of energy now being denominated in their local currencies. It arrives at this point that you're very clearly making, is like, they've got an issue between themselves and any other country in the world of like, how can we trust? How can we conduct exchange in a trustless kind of way? And that's why we're all here on this panel, because we're talking about that solution, right?
Absolutely. I mean, and that solution, all roads lead to Bitcoin. Turr Demeester, what are your thoughts on all this, man?
I haven't disagreed with things that I heard. I guess all of a sudden I felt like, if Bitcoin is the currency of the BRICS countries, and it's like they're using it to bash the dollar, I do worry a bit, like, is that gonna jeopardize Bitcoin's legal status in the US at some point? Or is there gonna be a president that's gonna try and run on that program? I don't have the answer, but it does worry me a bit.
Absolutely, and I wanted to talk about this, Preston, because you retweeted about the other day, Oliver Anthony. It's not right versus left. My fiance just did a cover on it. We were playing it earlier, and that was really interesting because you would think in that song that it seemed like he was talking a lot about the right wing talking point, so to speak. But I just love the fact that it was pointed to DC. Like I think people inherently know that there is something wrong with the system, but they continue to seek a political solution, a voting solution, where the actual solution is a opting out solution, right? It's not these politicians, whoever's in power, the issue remains the same. The elite few get to benefit from being able to create money for free that everyone else has to work for. So I think people are sensing that, but they don't really understand that, hey, look, the solution is to opt out entirely. So why did you retweet that?
Well, I retweeted it because I think for people that are polarized in either political party, they think that what comes next is not universal basic income, regardless of who's in charge in any, whether you're in the White House or dominating the Congress, whether that's Republican or Democrat. What's coming next is the deep need for additional monetary units to continue to be added into this system and just handed out without work being performed, but to subsidize liquidity throughout the system so we don't have a meltdown. And so in pop culture, and you covered it in your talk today, which was wonderful, pop culture is figuring this out, that they can't trust either one of these two parties, that they're starting to say there's something bigger and deeper that's wrong with this system. I don't quite know what it is. I know it's a problem, and it seems like no matter which side I vote for, they're not actually doing the stuff that they maybe promised, or they're doing things that I never thought that they would do, like UBI. And so that's what I think is starting to emerge in pop culture, and the pace at which this could accelerate. It could accelerate extremely fast. I don't know. Like when you look at the treasury market, and you look at what type of contagion can set in, forced selling is what we're really talking about due to impairment. Like sometimes that can happen in 6 months. Like you can be in a devastating situation. And I think, based on how much they inserted in the last go around through COVID, I think the next one's going to be much more massive than the last. I think your everyday citizen would look at the amount of debasement and fiat units that were added into the system through that, and they'd say, well, that was a one-off scenario. That was because of COVID. And let me tell you, it was not because of, this is just math, and you can see it in the chart, and you can see the progression. You covered that also today in your talk of just look at the math. There was people decades ago saying this is probably where we're going to be at on the debt load decades ago, and the accuracy of these forecasts are right on the money, years in advance. So it's a liquidity, it's a function of this fractional reserve system, and the way that it functions through just made up additional credit units on top of a small baseline number of units, and that they have to keep expanding it, and whose hands do they shove it into? All of that is wrapped up into these pop culture songs that aren't clearly identifying what the problem is, but there's going to be much more of that. That trend is going to continue to accelerate, and they're going to dive deeper into what is the fundamental issue.
Yeah, Turr, do you have any thoughts on that?
Yeah, I was just going to add that I remember comparing, this is back in summer 2020, comparing the Spanish flu in 1918, I believe, with what was happening in 2020, and there was just no comparison. Like you would think, oh, there was a global pandemic, therefore there's all these economic problems, but actually back in 1918 the economy barely budged, even though it had a big impact on people's lives, etc. So again, just another little tidbit that indicates yeah, we had the repo crisis, and this thing was just coming. It was very convenient. I really don't think that this was deliberate at all, this whole pandemic, but it was a very convenient story to have, to just massively bail out banks and in a way bail out the real estate system as well.
I would add into that what kind of what Preston was saying, this kind of pop culture narrative that we're seeing in us versus them. And Preston and I were talking the other night about this, and I was telling him how I've never voted Democrat in my life, but all of a sudden, like, RFK is looking pretty good. And the lines have become so blurred, and I think it's pretty evident to most people that now we are kind of having this us, we the people versus this government. And it's something that I framed up in a conversation I did with Breedlove, and I was calling it the crisis of confidence in authority. And really what we have is the internet has now given us all access to information, and the authority, we used to have these authority figures, whether they're institutions, the universities, or the doctors with their lab coat, but we have so much or the nightly news or whatever it was, but today we have so much information that we can instantly disprove and dispel any of that stuff. And so now we don't see them as authority anymore, and we know they've been caught lying over on all levels, from inflation is transitory all the way down to 14 days to stop this, to whatever you want to call it. And so we kind of have this breakdown everywhere. And so I think it really has turned into, and part of what I'll talk about later today is we have these like socioeconomic paradigms that break down at the end of these technological revolutions, and that's sort of where we're at. Like, we're starting to see these paradigms that we've had, they're no longer relevant for the world that we live in today. So we still sort of have these old financial paradigms and political paradigms for like this old industrial world, but we're in an information world. So like it's all breaking down, it's all happening at the same time.
So I wanted to actually, Preston, I think this is the question for you. James Lavish is a big believer in this, and I'm sure you guys are as well, but he covers the debt spiral, right? Where the U.S. government continues to accumulate all this more and more debt. And it's going to get to a point where the interest payments alone are going to be like, it's going to be unfeasible. And then it was Lynn Alden that posted this picture. And if you look out in a 50 to 60 year time frame,
it's unattainable.
Things are going to break.
Yeah.
It's inevitable.
Well, Turr had a fantastic slide today in his presentation, and he laid it out for people that want to try to understand this from like their own purview. He said if you were an individual with the way that the U.S. is currently structured, you'd make $60,000, and these numbers are pretty rough. I can't remember the exact number. But
yeah, $60,000 in income. Your expenditures are $100,000, and the debt you're looking at is probably between $450,000 and several million.
So think about that, and that's not having any equity in a home. That'd be like you don't own a home, but you got a debt load of $450,000. You make $60,000 a year, and you're paying, your outflows are $100,000. So think of that scenario, but instead of having a constant fixed income income expense on your line, it's going up as you're rolling the debt. That interest expense is blowing out 3 times higher than what it was before, maybe even more so than that. And so that's where it's becoming unattainable, and it goes back to what we were talking about earlier, which is if you're losing control of that interest expense, and you're losing control because now you have BRICS nations that are controlling the price of oil, which is your number one input to the price of everything, right? It's all constructed above the cost of energy. When you have that, when that leaves their hands, that they can't say, well, let's keep rates around 3% or 4%, let's bring them back down to those levels. When you lose control of that, what's coming next is this yield curve control, where they're going to say, well, we're going to just control the price, and they're already doing it in Japan, that it's going to be this, and it can't go any higher than that.
Is that coming to the U.S.?
Oh, it's coming to any G7 net consuming country. It's coming full steam. It's coming.
And you could argue that it's already there in some.
You absolutely can.
Yeah.
I would argue that this facility that they stood up, this backstop facility, what is it actually doing? It's any bank that is underwater in treasuries that they're holding. It's saying, well, you can just put them on deposit here, we'll hold them, and then hopefully the price, the interest rates will come back down, and then we'll just put them back on your books, and we'll just act like the price wasn't trying to drop below a certain threshold. So when you're saying I don't want that price to drop below a certain threshold, what is that? It's a form of yield curve control, whether people want to believe it or not. They'll get into a terminology debate. And most arguments manifest themselves around your definition of something versus my definition of something. But regardless of what definition you're using, if the price is trying to drop below 85 and the par value is 100, and there's this entity that's willing to come in and say, I will always buy at 85, you can just put it on deposit over here, and then if the price gets back up above 85, I'm going to push it back onto your books. It's yield curve control. It's a form of yield curve control, but they're playing with the duration. And so, when people are like, well, it hasn't come here. Well, to Mark's point, maybe it kind of has already come here. And they're already toying around with all these, and they'll call it they'll use all these fancy names to mask. I mean, yield curve control alone is a fancy name that masks reality, where they're not allowing the pricing of money itself to take place in a free and open market. And that's extremely dangerous, and it actually accelerates all of this.
So we got about 10 minutes left, and so things are clearly breaking, right? This is not tenable over a long period of time.
Can I just add?
Yeah,
you were
of course.
saying over a long period of time, but like right now, the projected interest payments of the U.S. government is going to be on par with military spending. 20% of all income that the U.S. collects through taxes is going to go just to interest. Like that, I mean, it's just so staggering. Like,
Which may be nothing unless you realize that the U.S. spends 10 times more on its military than any other
I mean,
nation.
Exactly.
to me, like, if I had to name anything that's the biggest budget in the world, I would always have said the U.S. military. It's the biggest budget of anything. So it's just staggering. Just to kind of like, because people talk like, oh, in the next 20 years it's going to go out of control. I'm like, no, this is out of control.
Yeah.
And to Preston's point, he called it an untenable situation. The Treasury put out a report in 2021 called it an unsustainable path. That was the title of their own report, admitting that this can't go on. We can't continue this way. The CBO is projecting, $50 trillion worth of debt by the end of the decade. So to their own admission, this is unsustainable. We just can't continue this way.
Gotcha. So I want to use the last couple minutes that we all have together, and I'm really enjoying this panel. Turr, Preston, Mark, thank you guys so much for joining us. This is the BitBlockBoom live stream, day 2. We're streaming it from the Swan Bitcoin channel, from the BitBlockBoom channel, and also Twitter Spaces, Simply Bitcoin, and BitBlockBoom. So thank you guys for tuning in. If you're enjoying the live stream, make sure to smash that like button. Anyways, guys, a lot of things, they printed a ridiculous amount of money, right? It doubled. I live in Miami. It doubled the housing, literally 2x'd it, right? Very, very quickly. Housing is becoming unaffordable, but where's the recession? Right, because I was speaking to Larry the other day, and he was like, "Look, like it's coming." Dr. Jeff Ross, it's coming, but we're almost. I think we're halfway through the year already, and a lot of people were predicting a recession this year. Where's the recession? Did these central bankers manage to pull off a soft landing? What happened?
I would say hell no, they haven't. I think it's still brewing. When you incentivize people to borrow a bunch of money at nothing %, they're going to do it, and they did do it. They went out and they borrowed as much as they could with as long as duration as they could muster. And as the rates were going up, what you found is nobody's rolling their debt. They're just trying to extend that runway out, and in some cases, especially if the debt's going down, they're rolling that debt because they want to capture the lower rates. But for the first time in 40 years, you have this aggressive uptrend. And so there's no incentive to roll that over. Well, they're going to get to a point where the duration runs out, and they're now forced to roll that debt at the higher rates. I've heard on a net basis that's kind of in the 24-25 time frame that a lot of that rolling over has to take place at these higher rates. So I think that's a really important point to understand for why it's taking so long. And I will tell you, I was very wrong about how long I thought this was. I thought these higher rates were just going to pop this thing like a zit, and it has really extended itself out way longer than I had ever anticipated. If you would have asked me, a year and a half or 2 years ago.
Turr?
I'll take. I have a little bit of a contrarian take on this. I think in regards to most people, and that is, I agree 100% with Preston. And I did a video recently, and I talked about Allstate, the insurance company, and they did a report that a car accident happens every 6 minutes. There's always a crash coming. Will this market crash? 100%. Did they save the market? Absolutely no. But how long can they continue this game? And that's the question, because I got my ass kicked in 2008, and I kept waiting. Like, they didn't fix the problem just got bigger. The banks aren't solved. Like, it's going to crash again. 2012, 2013, 2015, and it's like they continue to extend it out. And so you got the Harry Dents of the world and the Peter Schiffs, and they're the broken clocks that will eventually be right. And so I think it's just important to understand that we have the way that we think the market should work or should respond, or we want it to, but then we also have what we're in. And so we're in a bull market, technically a bull market. Until otherwise. Right now, we just bounced off the Fed's news yesterday out of the Wyoming market, And it is what it is. They did not fix it. They have only kicked the can down the road. The question is, how long can they continue to kick down the road? And every time it thinks that we think they're out of moves, they pull some other rabbit out of the hat. And so now, like I was talking with Nick Badia last night, and he's just talking about all the swap lines that they've already opened up, these new facilities they've opened up. Like, they're signaling to the market, they're already creating this to prevent this. So they didn't fix it. 100% it's going to crash. The question is when, and I just think that some of us can be surprised how much longer it can go.
Turr?
Yeah, I guess my take is I've just given up on dollar-denominated charts. I express my charts in CRB index, which is commodities. You just look at, basically take off the dollar glasses, put on commodities glasses.
Let me stop you right there.
Sure.
Could you explain what your logic is, for...
Yeah, because they're printing the dollar into oblivion, and if you look at, CPI is lying, so you have to take into account either high inflation. Ultimately, everything we do, all our expenditures are coming from basic input costs like oil and gas and foods, agriculture products, and of course some metals as well. And that's just what this index does. And it goes back 50 years, so you can really work with it. And then above all, the reason why I've stuck with it the last 10 years I've been playing with this is that it creates beautiful charts that actually make sense instead of just markets going up and up into oblivion, seemingly. Even on logarithmic charts, you're seeing just continuous uptrends. And then what you see is that actually the global stock markets, they broke in 2021. Global bond markets broke in 2021. Housing broke in 2021 from a 12-year streak of massive rallies. So I believe we're in a bear market. 2021 was the start. This is going to be a multi-year, call it a depression, that's how I see it.
I just have one other comment, and I'm going to put people back in dollar terms, and I agree with Turr 100% that if you're really trying to look at things and invest in a long-term viewpoint, you do want to redenominate the denominator in those charts into something else that's hard. And if you're not doing it in something hard, I would recommend you do it in the M2 money supply in each discrete point back in time, and those tell one hell of a story. But if you are just looking at it in dollar terms, typically a chart that I really like is when the yield curve gets inverted, and I would encourage people to use the longest duration with some of the shortest duration, so like a 30-year to a 3-month. When you look at that spread, and you look at it when it goes negative, when you look at when it starts to go positive again, once that shift happens, once you kind of have this volatility trend that breaks, that starts to go positive again, you don't see a bottom in equities for 600 days, like 2 years after that starts to go back positive again or starts to move in that direction. That hasn't even happened yet. So that if that trend would continue, and I'm not saying that it is, I just kind of suspect that just using that as a benchmark through the last 40 years, that's kind of been a good indicator as far as timing. That would put us out into 25 right now before you would find a bottom in this recession that we're talking about, at least from an equity standpoint.
I just want to say that I think what Turr said was actually really cool, and I'm going to start looking at things more that way. It's absolutely right. We need to compare things against other things, and specifically what we really want, which is goods and services, commodities. I know, Preston, you put out a ton of charts breaking down stock market moves against M2 money supply, which is a great way to do it, like kind of backing out the increase in the monetary supply, but also the commodities. So certainly recommend. I'm going to start looking at it that way.
Get the four of us, but send it to me.
I can share I actually made a deck just yesterday. I can share it with you. I would say also to the point about the traditional indicators of recessions, people are saying like, oh, but there's full employment. Like even the White House is boasting like record high employment. It's like, yeah, but look at all those people that are suffering despite having jobs, right? They're not making enough. These people, and so it's just so frustrating to look at that and being like, oh, but they have jobs, they're fine, right? Or even on the public radio, I heard like, oh yeah, gas prices are up again, but a lot of people don't realize that gasoline is only 4% of the CPI inflation. It's kind of like people like need to buy gas. Like your CPI index is just gobbledygook. It doesn't matter. Like real life people need enough money to pay the bills. So I mean, it's absurd to me that this is not called a recession. Like people are suffering.
So you said something really interesting, Preston and Turr, along those lines, right? This around 2025. that is the year that if Bitcoin continues to follow its previous cycles, we will reach a cycle top, right? So do you think that this macro recession will affect the Bitcoin pricing cycles?
I feel like Binance is a bigger factor. Like if Binance topples, like yeah, we'll see another dip, like maybe like with FTX or something. But to me, it's just like people are expecting the bailouts to happen just right away. So how deep a market's really going to fall? They're going to be standing. I mean, the bank runs are probably still happening. Banks are still teetering. So I just don't really believe that they're going to allow markets to go that low for that long. And what we've seen, I think. This is the big takeaway for me. Bitcoin doesn't correlate with much, but it does correlate with new money entering the system, M2 especially, and that's bailouts. So as soon as we're seeing bailouts, smart money is going to move in and predict the inflation down the road and just buy Bitcoin.
And I would tell people to look at global M2, not just the M2 in the US, but like take each major country that has a significant amount of currency in the overall global economy, and you got to dollar convert that M2, and then you got to combine those M2s to really kind of have a global sight picture of the liquidity that's being added or taken out of the system. And when you look at that in a log chart, it's just going straight up and to the right in log term on a y-axis log y-axis, right? So that means it's going like that if you put it in linear terms.
So, since we're all fans of central banking, that's been established already on this panel. They just met. I would call them the monetary demons. Marty Bent calls them the unproductive class. Whatever you choose to frame it as. They just met in Jackson Hole, and Christine, I'm going to play a message from our favorite central banker, Christine Lagarde. Let's see what she has to say.
Hello to all of you, and I would like to share this panorama that is behind me. It's the setting of the Jackson Hole.
I'm playing a meme. I apologize, guys. But anyways, God damn it, Yellow.
Those were my that was the comments I had for you.
That's how you feel about it.
That's how I feel about it.
I got yellowed. Anyways, but no, she was basically saying, the central banking talks, like, we got a solution for inflation. We got this solution for keep trusting us. You can rely on us. You can, et cetera, et cetera, et cetera. Anyways, guys.
Wasn't she, remember there was a video of her like last year where she was on some talk show and they were showing the debt and they're like, how does that come down? And she's like, don't worry, it will. Yeah, but how?
We'll figure it out.
Don't worry.
I think she got mad.
The thing that I can't wrap my head around is she's posting this, and if you go into the comments of the post, every single comment on the post is somebody saying buy Bitcoin, like that's a lie, and every comment is just destroying her. I don't know how these people continue to make these posts, and it's just a market, like their posts are turning into marketing campaigns for that which it's the opposite of what they're trying to do. I just can't understand how they're not understanding that. That speaks to their incompetence, I guess.
That's because all those people are stupid and they're ruining the democracy, and we have to take away their voice. Otherwise, people don't know who to follow.
Dude, it's insane. It's insane.
So do you think they really believe what it is they're saying themselves?
I think they believe that the system is super shaky. They're worried. They believe there is no other way. They don't trust people to come up with their own technology. They don't trust people to take care of themselves. They feel like they are the ruling class, and they need to try to be good parents to all these toddlers that are, the regular people. And I think genuinely they believe they're doing their best. I just disagree with that, that way of looking at society, but I think that's how they see it.
Okay, so I was finally able to play the video and we got about a couple minutes left, so I really want to share this and I want to get your guys' reactions. I know I'm not going to get memed this time because this is directly from the source herself. So I'm going to play the video. Guys, and you let me know your thoughts on what Christine Lagarde had to say.
Hello to all of you, and I would like to share this magnificent panorama that is behind me. It is the setting of the Jackson Hole conference that takes place every year. It is a little bit like the Sintra of the West, except it's been around for longer. Many central bank governors, many academics, many experts in monetary policy and on the economy in general will be gathering for 2 days, and we will talk about the current situation, the major shifts that we are seeing, the major breaks, and how we can best respond with good policies that will actually help bring inflation back to 2%. This is the goal, this is the mission. We're not done yet, we are working hard. But we also have to compare notes and share our views with others so that we can have really the highest level of confidence that we are taking everything into account.
I'm sorry, guys. I can't.
Where's
continue.
the puke sound effect? We need the puke sound effect.
Opti, do we don't have that on the sound? We don't.
I think they're all idiots, and when I say that, I mean that very liberally, because I think anybody who thinks they can be in that role and do a better job would also be an idiot. Because to think the fact that they're experts in monetary policy and they can control an economy, you're an idiot to think that. It's not just them; it's everybody. And back to your question earlier, I mean, Yellen is for sure believing she can do it. She's an MMTer, right? She's a Keynesian, and they all are. It's hard to hear that.
I felt like my body language analysis part is like, I thought she looked worried when she was like, we're talking about the current situation and, how things are working and what's happening. I feel like she looks worried. That's the kind of stuff I look for. Like, of course, she's trying to stay on top of things. That's how she sees herself. Just trying to put on a good news show.
And Preston, question to you. Do you believe that this 2% target is even feasible?
I guess my question that pops into my head, and it's popping into a lot more people's heads right now, is why 2%? Was it Powell that was asked this?
They asked him.
Yeah.
And his answer was it was insane.
It was an abomination. And he just bumbled around and didn't get to the point and just said a bunch of just qualitative nothingness, right? And so we got to get it back to the 2% target. And I think you're getting this population that's starting to say, well, hold on a second. Why do we even need 2%? Why isn't 1%? Why isn't it 5%? Like, and it's really, it's just pulling the veil back on this reality that everybody's just bought into through their whole lives, because there's been stability, and it's all cracking. And I agree with you. I think she looked worried. And again, if you would click on that off of her Twitter and go into the comments, just read what people are posting. It's wild.
Yeah, no, and I just wanted to the concept, right? And this is why I think what Javier Milei is doing in Argentina is so important, right? Because he's shifting the Overton window to the concept of there shouldn't be inflation in the first place, right? So what can we how do we accelerate that process? Is it a process where in the developed world where they have relatively stable fiat currencies, where we have okay, guys, we're going to switch it back to the main stage. Thank you guys so much for tuning in to the news desk. I want to thank our guests, Mark Moss, Preston Pysh, Turr Demeester, and we're going to put it back there.